if we go back to a bimetal standard, and I hear you talking, I totally believe in this as well. We need community. We need to band together. We need to take our power back. All of these things are very obvious. If we don't end up in some apocalyptic situation on a bimetal standard, I need a derivative system. It's going to be digital for me to order meat from Colorado, for example. I just had beef shipped to my house the other day, grass-fed, and not vaccinated, no antibiotics, no hormones, whatever.
Pastured. You need pastured more than grass-fed.
Yes, this is my wife.
We can have this conversation too.
My wife is really on it. Yeah.
Good. Awesome.
So in the digital age, we need to have something that can move digitally. And I think I can speak somewhat on behalf of the Bitcoin community and a lot of the listeners to the show that in some sense that derivative system is, quite literally been co-opted and corrupted, and is why we have the problems that we have today. And we were removed entirely from the gold standard. With Bitcoin being a decentralized public ledger bounded by energy, the mining process is what is issuing the new Bitcoin to the miners. The miners are getting paid that block reward. They're getting the privilege of adding the new block to that public ledger. It takes an immense amount of energy for somebody to do so. It takes almost no energy for somebody who's running a node, a copy of that ledger, to expose a dishonest transaction. So you effectively have an immutable ledger. So Bitcoin being digital gold, finite in supply, that's auditable. Currently, it's my understanding there's around 100,000 copies of that ledger being ran. They're called nodes globally. Watching that ledger, watching the Bitcoin supply, you have effectively a digitized gold that's incorruptible, and any derivative system built on top of that is much easier to expose if there is dishonesty in that. So for example, if you use a Lightning provider, you're sending your Bitcoin to an address that is effectively going to be a ledger on top of the main chain, the main ledger. And so you can scale Bitcoin, you can do more transactions at a lower cost than you can on the main chain. The ability to then protect yourself from that, effectively a bank, like a Lightning provider would be like a bank. You're going to give them the Bitcoin and they're going to use their ledger internally. If they're issuing more Bitcoin than they have Bitcoin on reserve, it's really easy anywhere in the world to take possession of the underlying asset. One of the challenges with gold is let's say we're on a gold standard, and it's possible for me to go to a bank and say, here's your currency, here's your derivative, here's your gold backed whatever. I want the gold, my gold. I want to convert that. If they've issued more derivatives and they have their underlying asset on reserve, then they're going to go out of business or be exposed. They're going to have more claims to the gold than they have on reserve. To do so in the digital age with a physical commodity is much more difficult to do than with Bitcoin. So the Bitcoiners, and myself included, think that Bitcoin will become the underlying asset in the global reserve asset, where gold has struggled to protect us from the corruptibility amongst those derivative issuers of the banks. Does that all make sense?
That makes a lot of sense, and I hope you're right. And again, I'm waiting for the test, because everything is a huge test. Having said that, there are ways to digitize the physical gold so that it is easier to transact. But again, for me, it always has to be redeemable 100% of the time, because if it is not redeemable, it doesn't mean that you have to do it. I want the right to do it. And when you're talking about gold, it was very, I mean, honestly, we have not run the test on this digital age yet, and everything gets tested. Everything gets tested. So the way that we've built our portfolios, because at Zang Enterprises, we take a very layered approach, right? So we're looking at what happens at the first part of this, what happens in the middle part of it. And the first thing we want to do is sustain your standard of living. That's where the digital gold comes in. And then I'm not really referring to Bitcoin because you can't convert that into gold, right? And that energy, I mean, it's going to be interesting to see because I know already that with gold and with silver, but silver gets destroyed in use, whereas gold does not. So I know that I can use this energy over and over and over and over and over again. This is kind of like, well, it took energy to create it once. So, but you can't really use it anywhere else. We're going to see what happens. This is a much broader, they look the same, right? You know, I mean, don't you kind of, why did they do it gold? Because they want you to think of it like it's gold, right? This is a derivative of fiat, fiat is a derivative of this. And there are a whole bunch of derivatives that we can't even see that are on top of all of this. But the layered approach takes into account whatever is most recognizable at first. So even let's just say cash that we know is not too far from zero. And when the rest of the public confidence is gone, that's it. Now we're in hyperinflation. Rapid inflation will push us over the brink. So I don't think we're very far from that. But the other thing that you want to do, and this is really where gold and Bitcoin can come together or any other intangible assets, because it's an intangible. You can't really hold it. They have to create a depiction of it. And that is to properly diversify. Now, Wall Street might want you to think that proper diversification are stocks and bonds and cryptos, right? That's what they want you to think. But all of them are intangible. Gold, silver, physical in your possession. Part of what we have to do is become our own central bank. Do you really think that the Federal Reserve has your best interest at heart? That's not their job. And we started talking about price stability and then we kind of got off on it. But do you know what the central bank definition of price stability is? Inflation at a low enough level that you do not change your behavior. You don't ask for more money at work. You don't change what you're buying. You just take on more debt to sustain your standard of living. For them, that's price stability. And their job is to regulate the rate and speed of it. And have you noticed how many talking heads on TV are saying, well, that never happened before. And well, that's kind of unusual behavior. Oh my goodness, right? You've heard that. That's because we're at the end of this life cycle. And so the things that are happening now, like it was supposed to be stocks and bonds. Here's a great example, just to make it a little bit clearer, right? Stocks and bonds, Wall Street wanted you to think that stocks and bonds were diversified because when stocks were going up, bonds were going down and vice versa, right? However, that's not happening anymore. Today, they can move in tandem, and that's actually been started in 2002, and there's a whole bunch of things about that. But now they operate in tandem. Why? Because they're all dollars. Because it doesn't really matter at the end of the day. So a lot of my work is about recognizing these repeatable patterns. And the strategy that I developed for myself based on all these years of developing currency life cycles is what we actually execute for everybody, but we take into account what your circumstances are. So the first layer, and this is where things like glint or kinesis gold that are redeemable on a little credit card, easy for transactions anywhere in the world, that makes sense. That's also where gold backs or gold money would also fit, as well as a level of cash. So, and then you go to your barterable position, and then you go to your protected position.
And your barterable position you're referring to as silver.
Well, it's a combination of silver and gold because it depends. It's based upon your current standard of living. And
What
there's some parts of it. Exactly.
Okay.
So if you're going for strawberries, and hey, 2014 is not that long ago, right? You remember the sovereign debt crisis that was happening in Europe. It was right around the same time with Greece and all of that. And people actually survive that by pulling out their silver. Could be jewelry, could be chopsticks, it could be picture. It doesn't matter. Gold and silver in any form are monetary at its base. So your barterable position, if you're doing, say, there are some things that real estate runs risk with. One of them is your property taxes, because how do governments generate their income? Through taxation, right? And you cannot, like, I can put this in my pocket and go wherever I want. You can put this on a hard drive and go wherever,
or in your head.
Thing.
You can memorize 12 words and take it anywhere in the world.
Well, you could. I'm too old. Okay.
You could write it into a song or a fable or
right. I would have to do that.
Words in a book or a diary, but yeah.
Probably the best utility that is very obvious for me to see.
Yeah.
Right.
Your ability to escape capital controls, take your value across borders.
So far, but we've also seen with China and a number of other countries how much they can control the internet. I mean, that's part of the challenge that I have, is that if, I'm just hoping it's not an illusion, but we're going to find out. However, the next part is to protect whatever intangible wealth you've managed to accumulate. And since we know what the fundamental value is, it's pretty easy to just balance that out and properly diversify your portfolio to protect whatever intangible asset wealth you've accumulated. Beyond that, then you want to be in a position for growth. You don't own any real estate right now, but it's severely overvalued, intentionally severely overvalued. Gold is severely undervalued. That's going to flip-flop. And so historically, it's actually much better than what I'm about to say, but it's easier to just say it this way. Historically, 25 ounces of gold can buy an entire city block, buildings and all. So a big part of the strategy is to hold your purchasing power intact. And during this transition, and we'll see these patterns, these are very visible. It's what I try and teach in my work, is to recognize these patterns. So we'll know when to take some of the wealth out of the gold and convert it into those income producing assets that you cannot outlive. When I first became a stockbroker, nobody ever talked about outliving your retirement. Now you talk to a stockbroker, okay, you got enough money till you're 80. Well, what happens if you live past 80? And oh, by the way, can I leave something to my children and to my family? Can I leave a legacy? So it's a as far as I know, we are the only ones that have such a well thought out strategy. But that's because I don't know anybody else that's studied currencies and currency life cycles since 1987. Do you?
No. And when you say we, you're referring to Zang Enterprises.
I am referring to Zang Enterprises. I'm really proud of us and who we are as human beings, because we really want to make a positive difference in this world. We really are battling to get sound money back in the system. And it's not for me. I'm 70. I have plenty. I could live the rest of my life and be very comfortable. That's not an issue. But I'm looking at everybody's children. I'm looking at the future, because the design that I see is taking us back to feudal times when, what does the World Economic Forum say? By 2030, you will own nothing and be happy. And one of the challenges that I've seen, because I'm so old, is the easier it is to spend money, the more money you spend. I mean, I came up before you could even go. I remember when you could first go to an ATM and pull cash out. Oh my God. You didn't have to talk to a teller. You didn't have, well, I remember that so well. And I can also remember overdrawing my account because it was so easy. Instead of just going into the bank and making sure what your balance was, blah, blah, blah. So everything is being transitioned to your phone. And with the tokenization that they are doing for all of your assets, we have to be aware so that we can make choices that actually put our best interest first. What a concept. What a concept. because I can see the good in this stuff, but I can also see the flip side.